The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 26th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send it to steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, and you should be, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We've got a rally out there, not to be unexpected, as we took a look at the seasonal patterns for the S&P 500 showed that the market should rally up in through Thanksgiving. And it shows that's over the last 25 years. And then it shows a pullback. We can go ahead and pull that screen up here. Give me a moment. Let's pull this over here and just show you what we're looking at. Now, this is just the S&P 500 over a 25-year period of time. This shows basically the Santa Claus rally, which, you know, the stock people on TV, they say doesn't start really till Christmas. I say, bah humbug to that one. It really starts right around the end of October, as this one did right around October the 10th out there. But we have this great tool here from SeasonX, and we can take a look at seasonal patterns or events, and one of those events would be Thanksgiving. So let's go ahead and pull up the Thanksgiving holiday out here in the U.S. There we go. So we'll go to Thanksgiving. Now, this is going to show 10 years worth of data, but let's take a look at the 25 years out here. So we can see that we rally. This shows you 10 days before, 10 days after, the vertical line being Thanksgiving. So that's, in essence, tomorrow. Shows that today should have been somewhat flat. Maybe we end flat, I don't really know. But shows that we should have rallied up into Thanksgiving, which we have over the last 25 years on average. Not every year, but over the last 25 years on average. Black Friday's kind of been a Debbie Downer day, so to speak. We won't be hosting shows that day. Market's only open till 1. So just put that in your quiver out there. What else do you want to take a look at? I'll tell you what we want to take a look at. Let's go. We started the week off, certainly Friday, in a oversold position. So let's go take a look at the advanced decline oscillator and the spot VIX index. The spot VIX, by the way, yesterday closed below the 50-day exponential moving average. So remember, we had two one-day rates of change that were below minus 10%. That formed on November 21st. That formed again on the 24th out there. Both of those suggesting that we should get to higher price. Now, with the spot VIX trading below its 50-day exponential moving average, which is 1886, that is bullish for the buyers have an edge out there, is the way I'll put it. If we take a look at the advanced decline oscillator, here on the trading day of November 20th, what's today, the 26th, out there, we were in oversold condition. That's the cool thing about these tools, whether it's the VIX index, you know, the one-day rates of change. I mean, those are helpful. Whether you're above or below the 50-day exponential moving average, the advanced decline oscillator, which is measuring market breadth, is taking a look at the advanced decline line and looking at the difference between the last 39 and 19 period exponential moving average. That's what it's using. That got us down into that minus 150 level. Once you get to minus 150, you're officially in oversold territory. Doesn't mean that you will bounce right away. There's a couple different ways that you make a bottom. In this case here, it was a catapult out of those lows. Now you can see the reading is 135.14, 134.9, 135. When you get to plus 150, Now you get to overbought conditions. The more interesting thing here about this indicator is if we turn down before we actually close at the 150 level out there, it's kind of a bearish signal out there, believe it or not. So just, we'll keep that in mind. We have to wait for the days to complete out there before we know where we're at. But we are approaching the overbought area inside of the New York Stock Exchange. But right now for today, things are set up. In fact, with regard to today, let's take a look at the daily equity future contract. So what are we doing here? Now, I've gotten rid of some of the descending trend lines because they've all been obliterated with the exception of the ES Mini. Russell 2000 just wiped it out yesterday. It does not have any resistance. Looks like it wants to retarget its highs from back here on October the 28th. If we take a look at the Dow equity future contract, it has woken up. It closed above the top of its profile yesterday, traded above it today. Again, 4 days in a row to the upside for each of the equity future contracts. So we open up the Russell 2000 as an example. Typically you have 2, 3, 4 day rallies. We have had one 6-day rally in the Russell. That was back on July the 3rd. We had another 4, 5, 6 day rally. That was back on October the 2nd. So I would say that if Friday is an update for the Russell, we probably get an update on Monday, just matching those 6 consecutive days before we start to see some kind of retracement out there. The NQ is targeting the top of its profile. It's trading with inside what we term as a sell zone. That's between the center of its profile, 24,994, and the top, which is at 25,358. And finally, the ES Mini, which is traded above the top of its profile. It's traded above its green oscillator and change line. All those are bullish conditions out there, but it is trading into its trend line resistance level. Where's that at? I'm going to give you an approximation around the 68.40-ish type level out there. So it's suggesting that it wants to make that move. If we open up the ES Mini, just curious, we have some 6-day rallies out there. We do. We've got several 6-day rallies, but typically it's about 2 to 4 days, and especially if this is just a counter trend move, don't know that that's the case. Today would be the end of the rally out there. Let's take a look at intraday charts and see what we're looking at from an intraday standpoint. Do we have any kind of topping signals? Should be right here. We've got the ES Mini popping up first. So the ES Mini negated a 2-hour TD9 count top, or it's in the process of doing that. The bar that we're in right now, I believe, closes at 12 noon. Let this populate here. I'll be able to grab my cursor. There we go. 12 noon it is. So, unless there's some big pullback here in the next 40 minutes or so, 46 minutes, that pattern's got is being negated. Now, it has triggered a Rhodes momentum indicator signal. No, it has not. I take that back. So no topping pattern on the 2-hour chart, no topping pattern on the 4-hour chart, no topping pattern on the 5-hour chart. All that sounds pretty good. No topping pattern on the 60-minute chart. However, bearish reversal candles for either the 30 or 60 would confirm a Rhodes momentum indicator top. Now, this morning, by the way, if you're wondering what the market was doing, we had the 30-minute charts. In fact, I'll just pull those open. We'll go ahead and populate those because each of those had generated. Well, I wasn't sure if the Russell 2000 did at the close of that bar, but if you just give me one moment here. So this morning. Last night when we kind of closed out the show, if you will, close out the market, we had TD9 count tops on the 60-minute time frame charts. But the 30-minute time frame charts this morning, as I was analyzing those, we had several Gartley buy patterns. One was inside the ES Mini. You can see those 2 blue lines that are drawn there. So not a surprise that we rallied. The same thing inside of the NQ. Now, the NQ on a 30-minute basis also recently formed, this at 10 o'clock, formed a Rhodes momentum indicator top. So close above that high, which is at 25,280.25, at least for its 30-minute time frame, says we continue to move higher. We did not. We got the TD9 count bottom on the Russell. We did not get the TD9 count bottom.
Stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Sorry about going through that break there, but in essence, there were bottoming signals this morning on the 30-minute time frame charts. Just the tools that I share with you and that we teach each day. Now we take a look at what's going on to the upside. The top row, we didn't see any kind of topping signals, and the same is true with the bottom row, with the exception of the 10, the 30, and the 60. If we were to see bearish reversal candles form, those could generate, if they're still there, the Rhodes Momentum Indicator tops. But short of that, we don't see any kind of tops, and price should continue to rally out there. We probably would have to take a look at the weekly charts to figure out. In fact, we should look at the weekly charts out here. Let me do this, the weekly equity futures. Let's just pull these up. So we'll take a look at all 4 of these and get a feel for where they are trading, what they are trading into. If they're trading above resistance, which would really be the oscillator and change lines out there. The NQ, probably not, but let's wait and see here. Let these charts here populate. We can see yeah, so in the case of the NQ, it is still below its green oscillator and change line. The ES, essence, is testing it. The week is again over, not until 1 o'clock on Friday. The red, the oscillator and change line for the ES mini is at 68.17. Now, closing above those would be a bullish signal, would suggest a further rally. So in the case of the Dow, you can see prices trading with inside its profile, pretty equally balanced. The top at 47,900, the bottom at 46,015, and the center pretty much right in the center, 46,958. Trade above that green oscillator and change line increase the odds of a further rally, so 47,900 is in the cards for it. That would be its upside target. For the Russell 2000, the Russell 2000, as we can see, is trading with inside its bullish structured profile, trading above a green oscillator and change line, closing above that, and closing above the center of its bullish structured profile, suggests really getting up to the 25.18 level. So I'd say the Russell's headed to 25.18. The Dow right now, the equity future contract, 47,900. The NQ is going to go at least try to target its oscillator and change line. That's up at 25,397-ish. And if the ES mini closes on Friday above its oscillator and change line. It's going to go target its swing point from back on October the 31st out there, anywhere between the range of 68.43 all the way up to the 69.53 level. So that's what's going on. We take a look at the weekly charts out there. We do have a few requests that have come in, so why don't we start on those? The first one coming in from Mary Jo in Naples. Happy Thanksgiving to you, Mary Jo, and everybody out there and everybody listening and everybody who's written in for questions, being Mary Jo, Duncan, Steve, Hector, Mohammed. Mary Jo wants to take a look at, TGB, but I've got Heckle up on the screen. How did I do that? Did I get to the right? There we go. Let's take a look at that TGB first. Now, what Mary Jo is considering is taking some profits. So here's my position on that. And this was most certainly taught to us by Tom. If you feel like you should take some profits, you absolutely should. What she's looking at with regard to TGB is it's been rallying very nicely this week out there. Of course, we have gold trading to the upside, gold possibly breaking out. We were taking a look at gold. We know that these two are directionally correlated out there. With regard to a daily time frame, do we have any kind of bearish signal out here? The answer to that at day's end could easily be very much no. Very much no. Wow, Steve, that's really great grammar out there. What I'm referring to is TGB, Seiko Mines, is trading into its swing point from October the 9th out there. Volume was 7.6 million shares, and the high is 484. We're at 491. Mary Jo, if we close above 484, you're in breakout mode on the daily time frame. Full out breakout mode. Yeah. If we take a look at the weekly time frame out here, the weekly time frame has a Rhodes momentum indicator top. And if on Friday price closes above 484, you'll negate that signal and you'll be in full breakout mode. Then we're down to the monthly chart. The monthly chart on Friday is going to go ahead and confirm a TD9 count top. Now that fall could be a pretty decent one because it's printing right now at 491, and its price target would be 351. But there's a lot of other support to the downside before that would unfold. But let's remember, the TD9 count patterns, if in fact the top is going to form, is going to be on the high of bar 8, bar 9, which we're at right now, or the bar following bar number 9. So it might not be that you get that topping signal in TGB until next month. Watch the daily and weekly, so watch it on Friday. If you're asking, is there... Now, again, if you want to sell into this rally, by all means do that, because there's always another trade. Can always add to the position on a pullback, whatever, and you're only looking at a partial out here. But if you're asking me to give you the feel for what the TGB charts are doing on a daily basis, well, you just got that. Now let's go take a look at Hecla. Hecla may be a little bit different, Mary Jo. Let's go see what it's telling us. Here we go. So we take a look at Hecla. Hecla is taking on its swing point that has a daily Rhodes momentum indicator top. That is from the trading session of November the 12th out there. Volume on that day was 20 million shares. Now, look, we've been trading for less than 2 hours. We're up with about 5 million shares. It's Thanksgiving. You got to expect its lighter volume. Yesterday, we were pushing into it with 15 million shares. Going into 20, so light volume. But again, it's the holiday. I would say as long as our price stays inside that swing point, when I say stay with that swing point, trades between, closes between 1480 and 1609, it's probably going to go tackle that high. With regard to topping patterns on a weekly time frame, I don't have one. Yeah, I don't have a topping pattern. You're trading about profile resistance, green oscillator and change line. Hecla wants to rally further. The monthly time frame, whereas we were in bar number 9 for TGB, Hecla's only in bar number 6. So got no top on the monthly, no top on the weekly. The daily can negate its top just simply by closing above the high from November the 12th. Again, that high being 1609. So Mary Jo, you got great options out here, and that is a beautiful thing. So happy Thanksgiving to you. And thanks so much for writing in. Duncan Steve wants to take a look at bull, and that ain't no bull. I believe that is Webull out there. So if we take a look at BULL, trading out right now at $9.17. What I show down here is a wave 7 bottom. That is letter G, the 7th inning stretch, and today you are trading above the top of its bearish structured daily profile. So a close today above 877 would be a bullish outcome. A second close above 877, that would mean on Friday, would generate a bullish profile change in trend. Now, we don't have a ton of data out here, quite frankly. On the weekly chart, it shows that on Friday you could form a Rhodes momentum indicator bottom. So wave number 7 on the daily, Rhodes momentum indicator bottom on the weekly, and we haven't traded enough on the monthly to give us any kind of a pattern out there. But Steve-O, if you're looking to go long this position, I can see that. for sure. You've got those bottom signals. What price should do then is rally up towards the sell zone, used to be the buy zone of its weekly profile. And that is between the range of 10.99 to 11.81. If Webull is only going to make a counter trend move, it would find resistance at that area between 10.99 and 11.81. So I hope that helps you out. With regard to bull, let's go take the semiconductor index out here, the SOX, SOXX, that ETF. And the SOXX, the nice thing about this is that we've got the profile levels that we can take a look at. And here we take a look at profiles, slightly bullish structured profile, price trade above its green oscillator and change line. This is the daily time frame we're looking at. Price should go target profile resistance, 293.46. The weekly time frame chart, also a bullish structured profile, also with price trading above right now its green oscillator and change line. Therefore, price should go target the top of its profile, 295.31. So we got one call for 293.46, the second call for 295.31, and the monthly says, yeah, I'm just going to rely on the daily and the weekly out there. With regard to topping patterns, the monthly chart does not have a topping pattern. And that's pretty bullish then for the semiconductor index. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So God has opened up a restaurant in my backyard. I don't know if it has to be a weather pattern, and I think it was those two storms, those two hurricanes. We never got anything through Florida, but we had certainly waters kind of push themselves in. And really over the past month, so we have something called the king tide. So in October is when the tide levels are really high here. Almost get up to the top of my seawall. But it's been doing that for years out there. But I'm telling you, at night, and these are big fish. So in the daytime, sometimes you can see them around my dock. And these are like, 18-inch small schools of fish with big guys coming up behind them. And, I mean, you can sit out there at night, which I usually do for an hour or so, maybe a couple hours reading, doing whatever. And but the noise in the water it's extraordinary. In any event, we're taking a look at the IWM. This for Hector and Patty. Happy Thanksgiving to you guys. We're taking a look at the Russell 2000, the IWM. We can see that this has been trading in a very long-term consolidation pattern. Probably taking us back in towards the 2020 timeframe out there. As you know, when we break through a consolidation, it provides us with a measured move equal to or greater than the consolidation. So we're trading above the top of that resistance level. We closed above that last month as well. So if we close above it being maybe about 244.46. So if we close above that on Friday, two signals suggesting that we have a consolidation measured move. Now, I'm just simply going to copy this. It gives us one price objective. Paste it. Move it up to the top. Hope I grabbed the right one. There we go. And that's going to give us one price projection level, which is right around the 326 area. Now, another pattern that we'd really like to see out here is we'd really like to see the B point of a small A to B equals CD pattern taken out with volume. And that would be the swing point that takes us back to February of 2022. And the high there was that 244.46 number. And the volume there was 711 million shares. Well, we're going to close out the month on Friday, and we are at 878 million shares. So you've got a swing point that has been taken out with volume. Last month, it was 871 million shares. This month, 878 million shares. So you've got it confirmed, yes, A to B equals CD pattern to the upside. No, it ain't the Gators out there. Luckily, it ain't the Gators. It's the Sharks. But it's not the Sharks. It's not. Every now and then you see a shark in the intercoastal. It's a feeding frenzy. And I was out there last night at right around midnight, and loud as can be. Very cool, though. In any event. So your A to B equals CD pattern, don't worry, Hector and Patty, I'll get to you, is going to line up to get us towards the 311.44 area out there. Now, I know you'd probably like me to find a larger A to B equals CD pattern, which we could do, but this is the one that begins back in 2020. And so this is the one that I really think is in place out here. So the answer to your question with regard to the IWM is you've got over time, you've got a confirmed A to B equals CD pattern to the upside, and a consolidation breakout that gets you into that 311-ish, maybe 325-ish range out there. But there's some work to be done before that unfolds. So let's go take the weekly time frame chart. What work does the weekly time frame chart have to do? Well, what the weekly time frame chart has to do is got to take out its recent highs out here. Those recent highs of that swing point is from October 17th. And that had 235 million shares that week. This week, we're into that swing point with 92 million shares. So I don't even care if it's a holiday week. It's light volume, period. But you are trading above its green oscillator and change line, and you love to see this close on Friday above 246. That'd be above the top of its its weekly profile. That would indicate that we should go at least make a move towards that swing high from October 17th out there. So that's a level that you want to be paying attention to. If we take a look at the daily time frame, what do we have out here for the daily time frame? Open up its set of charts. So we can know that the Russell has had a nice rally the last 4 days. We've already talked about that. We're trading up towards its swing point high back in October the 15th. We are trading into it. So the IWM has a swing point from October 15th, 45 million shares traded that day. Yesterday, we were up with 46 million shares. We did not... No, we didn't get to the swing point. Today, 10 million shares, not too shabby. It's about a 30 million share a day, if you will, if volume were to keep up. going into 45. I would say that if we close above the low of that swing point, that is at 247.06, we're at 247.15, you will likely go test the high. If we close below 247.06, you'll likely go test at least the low of that swing point out there. But those are the levels that you're working with on the daily and the weekly time frame, so there's work to be done before the monthly can do its high-fiving and spike the ball, so to speak, out there. So Hector and Patty, hope that helps you out. Good to hear from you. Happy Thanksgiving as well. Mohammed wants to take Jose Cuervo out there. Who doesn't? So let's pull up Cuervo out there, QRVO, and this is trading out at $86.49. Now, you're going to get a bullish profile change in trend. Why? Because we closed above the top of its profile yesterday. We're trading above that today. This is day number 4 in a row to the upside as well, so you could get, another day or two worth of rally before it starts to pull back, but it should do that. It should pull back, maybe a 2-bar pullback out there. The weekly time frame chart is, what is it doing? So I don't really have a top per se, but let me open this up. Maybe if I see something else out here. Nah. No. Do not have a top. What we do have is prices trying to get back inside its profile. It's been below that profile. The profile level I'm referring to is 85.32 for 2 weeks. Now it's trying to get back inside there. If it can close inside there, would suggest that it should rally a bit further, maybe get up to 80. It's got a sell zone between 89.09 and 91.61 out there. Cuervo. So the daily says I want to rally further, except for the fact we've got 4 consecutive days to the upside. Weekly wanting to get in on the game and make a move towards 89.09. The monthly chart looks good out here, Mohammed. And I say it looks good because price is traded above, has been above for, now this would be likely the 4th month in a row, above the top of that daily profile, or monthly profile at 84.48 out there. And you're at 86.44. So things are looking pretty good, I would say, with regard to QRVO, and hope that helps you out. You also want to take a look at Service Now. NOW being the ticker symbol. So let's pull its charts up, see what we can glean from them. We've got the daily, weekly, and monthly. So on the monthly time frame chart for Service Now, we've got price that's trading with inside its buy zone of its monthly profile. Mohammed, that's between the level of 776.12 to 869.89 out there. If we look at the weekly time frame chart, what we don't see out here is any kind of bottom pattern. Price is trading below profile support. It's trading below its red oscillator change line. It's trading into a swing point from the week of April 11th. The volume on that swing was 12.2. Last week we closed inside that swing point was 7.6. This week so far we've only got 4 million shares, but we're still inside that swing point. So it just says caution and danger out there. What you need to see is price close above, say 831.64 on less than 12 million shares to reject a swing point on lighter volume. We don't have that right now. I would say price is looking like it wants to head lower. If you look at the daily time frame, I don't see a bottom pattern. In fact, it doesn't have a bottom pattern. It's just consolidating with inside its profile. And that's the range from 802.03 to 830.16. Thank you, Al, for getting that music just a tad higher out there. I know this time we're going to break, and we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're looking at ticker symbol KZIA, Kazaya Therapeutics. This is for Dan inside the Tiger's Den. Yesterday was one heck of a fun day for Dan. This thing went from this opened yesterday at the price point of $8.29 and closed at $12.79. Not a bad day out there. So what did it do yesterday? Well, yesterday it negated a Rhodes Momentum Indicator top. And so on a daily basis, there's no topping signal. There's an A to B equals CD pattern on the upside. That price, let me just pull this back just a tad. We'll draw it in on the weekly time frame chart, the A to B equals CD pattern. So the weekly time frame chart needs a close above June 13th's high, which is at 1286. Volume there was 51 million shares. This week we're 1.7 million shares. That's wild. Okay, so you had 51 million shares out there. People who bought it at 1286. What were they thinking when it got down to $6? They were thinking they just lost half of their money out there. So maybe it's going to take a while to push through this level, Dan. You got profile resistance at 1286. You got that swing point out there. I mean, if you could close above it, even with this out volume, you'd trigger an A to B equals CD pattern to the upside. But we don't have that on the weekly time frame, and the daily we're still not trading above that swing point right now. That's at 1286 number out there. The monthly chart for Kazaya shows that prices ran right into its TD knockout breakdown level at 1280. So I like the price action, hate the volume. And right now I'd say you got to watch 1286. That's the top of the weekly profile. That's at swing point. You start trading above that, Dan, then I say you start getting up towards that 1879 level. So that's what I see right there. Hope that helps you out with regard to KZIA. I was actually trying to find, and I don't think this is the case, so I think SeasonX might have a data issue here. I was trying to find for you the seasonal pattern. But see these spike lows out there? That doesn't seem logical, over a 26-year period of time. So I can't really put that up there for. I mean, I did, but I don't think it's useful for us. So we'll just simply move on. Gray Rock inside the Tiger's Den. And happy Thanksgiving to you. Want to take a KTOS? It sounds like a radio station to me. KTOS. KTOS is trading out right now at $76.33. And if it can close the day above $74.89, that's the top of its daily profile. You have a bullish profile change in trend. That would suggest a further move higher, but in order for that further move to go higher, it's got to take out the top of its weekly profile. So price is trading right? So even though the daily had a little celebration and a high five, I think it was more like a low five. Low five because price is taken on 76.75, the top of that weekly profile. If you can close above that on Friday, that would be a nice bullish outcome. On Friday, you're going to complete a monthly TD9 count top. And you're trading inside a profile that formed this month. You've got support between 34.46 and 51.82. Resistance up at the 95.21s. Yeah, so it's a pretty large profile out there. What should unfold out here is price ought to make its way back to its oscillator and change line. But in order to do that, you're going to have to get back below. You're going to have to actually close below the bottom of its weekly profile. When I take a look at KTOS and open up its weekly time frame chart, when was the last time we closed below the bottom of a weekly profile? This doesn't count because you had a new profile formed above price out there. So really, this is pretty strong. So here's what I would say, Grey Rock. If you ever do get a close below the weekly profile, that's the time to really be paying attention on this. So that's its nice real support level. Since that is held, if you can get back above the top of that weekly profile, 85.03-ish is in the cards. That's the weekly oscillator and change line out there. That's what we see when we take a look at KTOS out there. Let's go take a look at the rocket ship, RKT. This for Greg. RKT is trading out at $19.90. Now, you've got an A to B equals CD pattern to the upside that has already attained the 1-to-1 level out there. If you can't see it, I'll go ahead and draw it in. We'll put in the A point, which is a nice Rhodes momentum indicator bottom signal. That wasn't the right tool. So you have a nice wave number 7 bottom and a Rhodes momentum indicator bottom out there. That's in the daily time frame. That is now converted into an A to B equals CD pattern to the upside. You can see the 1-to-1 was about 1894. 1917 was the top of its daily profile. The fact that we're above it now for 2 consecutive sessions says we should rally further. What's the weekly have to say? The weekly says, hey, I'm totally on board with that, guys. I'm rallying up into my TD9 count top out here. And that's the swing point from back on September 12th. And the volume there, 153 million shares. This week, it's only, 2.5 days, if that, 84 million shares. So kind of hard to measure the volume there. I would just simply say if you close above 1987 on Friday, you're inside that swing point and likely to move higher. Why? Because we've taken out profile resistance on the daily time frame, because we're trading above profile resistance and its oscillator and change line on the weekly, and we're trading above the same on the monthly time frame. So RKT is definitely a rocket ship, and it wants to continue to move higher out there. So, Greg, I hope that helps you out. You also want to take a look at LUMN. So let's go take a look at Lumen. See what it is doing out here. We got Lumen trading out at the price point of $8.18. With inside its slightly bullish structured daily profile. And that suggests a run up to the 865 level. You got a TD9 count bottom on the daily time frame, so that's a nice thing. The weekly time frame had a sell the D point top, and that took price right back to its oscillator and change line where it found support. And now we have price that's trading above not only its oscillator and change line, but above the top of its profile. So if on Friday LUMN can close above 809, that would be a bullish outcome for the weekly time frame. We already know the daily is a bullish is in a bullish mode out there, and the weekly would join that. The monthly time frame says, all I did was rally up in my TD9 count breakdown resistance level. That was 1138, and then since backed off. Well, it was while it was doing that, the daily time frame was confirming a TD9 count top, and now it's got that TD9 count bottom. So it's time to rally, 865 being your likely next stop out there, next battleground. And if you can clear that level, well, then it looks like you'd be back in store for a move to that 1138 area. So, Greg, hope that helps out with Lumen. Thanks so much for your request out there. Let me just check the den. Are there any other requests? Nope, I don't see anything. Oh, Nike, if we have time. We've got nothing but time out here, and that's a beautiful thing. Hey, careful those grocery stores. I was out there early this morning. Thought I was going to beat the traffic. It just had a couple odds and ends to do, but it was 2 different stores that I had to go to, and the people are out. Of course, they should be. It's Thanksgiving. NKE, Nike, is what we're going to take a look at right now. We got Nike trading above the top of its daily profile at 63.96 out there. That's a beautiful thing. It's got a nice daily TD9 count bottom pattern. It's trading in towards a swing point that formed on the trading day of November the 13th. The volume there was 21 million shares. Today we're up so far with 4 million shares. It has not gotten to that swing point. It should. The low is 64.88. If you close inside there, you're likely going to head up to 66.25. You close above that, you'll have an A to B equals CD pattern to the upside. The weekly chart for Nike, TD9 count bottom, price trading with inside its profile. What it really needs to do, it's a profile where the bottom and the center are exactly the same. So I would say that Nike should rally up towards 65.69 to 66.51. The monthly chart, that's the one that's a real burden for Nike. Daily looks good, weekly looks good, monthly looks like it still wants to throw up. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Looks like we're going to close out the show to a certain extent looking at Ethereum. A request from inside the Tiger's Den. Not sure who that came from. Jambalaya. So we take a look at Ethereum out here. It formed a daily by the D-point bottom pattern. It did that a couple of days ago when it formed this bull sash candle. So your support level here, if you were long Ethereum, you would consider closing out that position if you were to see it close below 26.39. But otherwise, price should rally, and it should rally up towards 32.02. Price is trading with inside its daily bullish structured profile. We've been above the center of that profile for now 3 sessions out there. So 32.02 is wide open. If price can take out that level, you ought to see it move up towards 35.78. 35.78. That is courtesy of the TD9 count breakdown pattern out there. The weekly chart has a TD9 count top. has no bottom. Has not gotten back to its breakout level of support at 2502. So it is really the daily that is driving the bus. You got to keep your eyes on that daily chart out there. It starts slipping and pulling back, and then you start closing below profile support at 2373. The weekly is going to win the battle and get you back to the 2502 area out there. And the monthly is trading below profile support, which is at 3266. But the daily is saying it really wants to rally at least up to that 3202 level. So Jambalaya, happy Thanksgiving to you. Good to hear from you. And and that's what's going on with regard to Ethereum. So we do have about 30 seconds left. Let's go check back in on the let's go take a look at the daily day trading charts out here, the intraday charts for the ES Mini. So what do we got here? Still no tops. I take that back. You've got a 10-minute Rhodes Momentum Indicator top, but I don't think that's going to do a whole heck of a lot out there. Let me try putting up the NQ charts. I don't know if they'll get up before the show is over. Let me wish everybody a very happy and healthy Thanksgiving out there. Try not to eat too much. Spread it out over time, and and enjoy your time with the family and friends out there. Always some good football on. For me, I've got a 2-iron that's staring me in the face. So I better go sign off and go work that club out. Have a terrific Thanksgiving, folks. Thanks for being here. We'll see you on Monday.